Okay, people, we are witnessing another good time again, and this time we have the Edge Finder for another week for free use. And this is thanks to Trader Nick. I really appreciate this free week. I really want to see this. But first and foremost, I want us to compare how the Edge Finder does its things compared to the way I do my things. So this is my own finder, my own trade finder, and as you all know, it is only focused on the fundamental news. And I'm going to be comparing it side by side to the Edge Finder. The Edge Finder, unlike mine, has a lot more to offer, like a lot more, because I'm only looking at this blue part right here called economic data. It has technical data and sentiment along with it. So obviously it has a way better way of determining what is going good and what is going wrong, because focusing on only fundamental is not easy. Like yesterday, you all saw the video I saw the fundamental perspective, but when I look into the chart, for example, we had the New Zealand dollar against the Swiss franc, the CAD, the US dollar, the British pound, the euro, all against the Swiss franc. But on the chart, it was looking very, very opposite to what we were seeing yesterday. So I'm going to put this side by side against my own trade finder, and we're going to compare what it is showing to us right here. So first thing is the top thing here currently today is the euro against the US dollar, but on my own end I'm having the New Zealand against the Swiss franc, and this is because I haven't updated. That's not an excuse, but it is good enough for me, because as soon as I put in those updates for today's news, I'll go into the economic calendar. I'll have to manually copy all of this and put it all into the news data input for the system to then compute and calculate for me the current economic trends. But I can also go down here to top setup echo. Now on the top setup echoes, you can focus on things like only the economic data and what is really happening. So over here we have growth, we have inflation, and then labor data. Unlike mine is not so well separated, but however, it's still taking account of exactly the same things as the Edge Finder does. Now, I think the way he does his calculation is quite different from the way I do my own calculation, because he's having all the way from zeros to twos and then adding only the positives and negatives while the zeros are left behind, which is actually accurate. But on my own case, I am using a weighted calculation. So for example, I calculate central bank rates with a percentage of 15% causality, meaning if you should add all of this properly, it would give you 100%, though it's currently showing 101 because it's approximated up to the nearest whole figure. But if I should put them into the decimal points, they will end up at exactly 100. Now, what my own weighted average does, if you look at the formula right here, the formula simply says the central bank rate multiplied by 15%, this multiplied by the GDP by its own percent, CPI by its own percentage, and so on and so forth. If I hover my mouse over the said percentage selection, you'd see the percentage pop up at the top. For example, we're looking at the unemployment rate bias popping up at 15% of the entire thing. So by the time it does its weighted average, obviously the zeros will be zeros, and then the positives and negative will have its percentage, and then the time it does the addition of all of those, it gives us a weighted value. So obviously I will always be skewed off compared to what it has here, but generally we'll mostly have very, very similar outputs. For example, you can see as of yesterday, my whole system is screaming against the Swiss franc, and here you can see the Canadian currency is dealing very good against the Swiss franc, and over here you would see that is also my second best performing outlook. Though the good thing I like about this is, apart from the economic data, right, it then incorporates sentiment of the market. So I do not have a way to incorporate sentiment yet, and as you can see, sentiment, I have COT data, but I don't have the retail sentiment. Well, so even with COT data, you can see what COT data does was that it automatically doesn't put Swiss franc as a terrible currency. In fact, matter of fact, if you look at the economic top setups here, you see Canada against Swiss franc, right? But if you come up to the top setup sentiments, you can see that Canada against Swiss franc is nowhere to be found at the top edge. You can feel it's right here, way down below, and not so powerful anymore. So by the time you do all those adds and minus and you come up to the full top setup page, you will find out that that's the same Canada against Swiss franc, which by economic standard is supposed to be the best trade to take. By the time you add sentiment and then add the current technical situations to that chart, it is no longer the best thing to trade. So I would say these top setups alone, the top setup algos alone, is more than enough information for you to trade the market. Though I like the fact that there is a whole lot more details into this, and we have the whole week to go into this. We started yesterday. We're going to see how it goes, and we're going to try to go into each and every one of them one after the other. But with the quick ado, let's just take up maybe 2 or 3 pairs here immediately and see what it really looks like on the chart. So first and foremost, we're having the euro against the US dollar reading as the most bullish assets to trade. So let's go look for the euro against US dollar, and let's look at that chart. Oh, you can see that chart right there. It is heavily bullish. And take note, I'm on the 1 hour chart. If we go back to the daily, you can see how very strong this move is to the upside. Very strong. Matter of fact, this was the last high here that just got broken. We expected some retracements to some good supplies to good demand zone, which currently we have witnessed a good demand zone. This is a very good demand zone, and price only just tapped in tad bit of it, like just very tiny tap, doesn't even go into it. And on the 4 hours, you can see that even clearer. You can see that it's just a very miniature drop into the spot, not as expected. And then all of a sudden it went up, came down, and finally shut off. So if you want to trade the 4 hours, you should be waiting for the markets to really rip off, and then you could hope to trade from areas like here, or you could even still wait because this zone still stands because the price only just tapped a little bit. It didn't really dig into 20% of it. So you could still wait for this, or you wait for this, or you could just set your trade here, put your stop loss way below, and hope for the best. Though that's the thing with trading, you only hope for the best. So let's just check out the worst performing immediately before I leave here. So the worst performing is the British pound against the New Zealand dollar, meaning the New Zealand dollar is actually very powerful, which obviously, let's see if that's similar with what I have. New Zealand dollar against the British pound. So take note, I'm not so up to date. Oh, you can see that the British pound is also one of my negative in terms of economic data. So adding economic data to other things even makes it worse off to trade. So let's check that out, the British pound against the New Zealand dollar. And wow, you can see that clear drop right here. For the past, this is a 4 hours candle since 1 p.m. yesterday. We've been seeing clear drops. So we are hoping for what, as usual, we're waiting for price to really prove to us that it wants to continue in a lower downtrend, and we want it to cruise through this structure. If it goes through this structure and retraces to a demand zone, to a supply zone, whichever supply zone it creates, I can see one already here. This is a good supply zone. But if it creates other supply zone in its move, then those supply zones will be taken instead as a sell-off place, and we will try to see if the market heads down to this position. So this will be all for this morning. I really love the Edge Finder. Thanks to Trader Nick and the A1 Trading Company. It is really good to have a company that looks beyond the economic data and does all these multiple calculations that are needed in the trading space. And take note, it's not just for currencies anyway. It is for any trading assets, all the way to commodities, indices, crypto, and even bonds. So if you really want to get yourself the Edge Finder too, you could get a link to Trader Nick's website. I'll put the link in the video and in the description below. Do well to patronize him. I do not have any affiliates. I really wish I was affiliated, but I don't have any affiliate links, so I won't be making profit off your move. But nevertheless, it is all for the better. So thank you all for today's episode, and do well to hit the subscribe button. If you have questions, do well to ask questions in the comments, and if you just want to chat, feel free to hit the comment zone and tell me what you think about this software. It is, to me, one of the best software out there for any trader. Peace.